Welcome back, Rebels. Today's Rebels Edge special episode. We're going to have the short report with the man himself, Geoff Garbacz, but also cooking with Cisco. Earnings are sizzling on, guess what? Even stronger than anticipated AI demand. Fly Me to the Moon, Firefly Aerospace is up over 20% on their role in the Golden Dome build out. We'll talk about that. And finally, Disney in the doldrums. The House of Mouse once again fails to impress fans and investors. I'm going to be covering all those stories along with Geoff Garbacz in the short report. All that and more on today's Rebels Edge. All right, folks. Marc LoPresti, CEO, Senior Market Strategist at Market Rebellion. And as you can probably tell, that is neither Pete nor John Nigerian. He has the facial hair, but he also has the hair on top. So that disqualifies him from being one of the brothers. That is, of course, if you're a loyal Rebels Edge watcher, as I know you are, because you're a smart, savvy investor, you know who that guy is over there. That's Geoff Garbacz, one of the best in the business. He does our Rebel Squeeze Play, our setup morning call. He is here not only to do the short report, but to stand in for our very abject lack of a Nigerian on the show. Geoff, thank you for being with me.
Thanks for having me. I look forward to it.
It's always a pleasure, man. It's always a pleasure. All right, well, let's jump right in. Let's see. We're going to cover macro first. Industrial production in the Eurozones, what I'll cover today, only a very, very modest 0.2% month over month gain in September. Why is that important? Well, Street was looking for a much higher 0.7 of expectations. That's a pretty big miss, indicating some continued weakness in industrial production there. For its part, the UK, well, also reporting very marginal GDP growth, even more meager, just a spot 1%. For the third quarter, also below forecasts. That is following an even more significant decline, comparatively speaking, for the UK versus the Eurozone. Well, you got anything in the macro that you're looking at, Geoff?
Well, today we were supposed to get CPI, but we're not going to get CPI. And it looks like the dog ate my homework. We're never going to get it. And we're not going to get a jobs number. So we're going to be waiting quite a while before we get the next read on how CPI is looking. And I heard one of the speakers on CNBC this morning was saying they're going to rely on a State Street inflation index in the meantime. And that since May, it's only up like 1%. So it kind of supports that. We're kind of through this whole inflation thing, and time to move on and put some gasoline on the fire, so to speak, to get the economy going again. We don't want to have it fail.
Totally agree with you. I think it also highlights the fact that so many of these data sources, so many of these indices, the BLS numbers that are compiled using pieces of paper and mail and envelopes and number two pencils. It's horseshit. It's in the past. We don't need it. Private data sources, much better, much more accurate, much more real time. And here's the crazy thing, folks. Have the markets been able to continue in the absence of all this wonderful data that we rely on and make such a huge fuss? Yes, they have. Has the Fed been able to continue to do what it's doing? Maybe not as well as we'd like them to. Yes, they have. It has not given the Fed any reason to say, well, we can't make a decision in December. We can't give you a 25 or a 50 basis point cut, which our new Fed Governor Moran is very rightfully calling for. The old way of doing things with data is the past. It's in the rear view mirror. But okay, let's move on to fantastic futures. For me, I'm going to talk about Bitcoin. John and I spoke at a conference in the Cayman Islands just earlier this week with a number of the Bitcoin and crypto luminaries that flew in for that purpose. And a lot of people are asking, hey, we thought we were going to be much, much higher than we were or than we are today. Every time Bitcoin flirts with that 100,000 number, as it has been in the past few days, there's cause potentially for some concern. I'm not worried. I'm going to tell everybody why. We did not get the catalyst that's going to drive Bitcoin to a higher high before the end of the year. That catalyst is, of course, the completion of President Trump's cryptocurrency legislation. We got to get the balance of the Clarity Act passed. The only reason we didn't get it passed, Geoff, you know why we haven't gotten it passed yet. Why have we not gotten it passed yet?
Well, the government's been shut down.
There you go. There you go. But, kudos to those 8 defecting Democrats that came over and made last night's successful vote possible. So let's get back to the business of running the country. Let's get back to the business of completing the Bitcoin and the cryptocurrency legislation. Geoff, am I right? I mean, I still have our IBIT December.
For December, yeah.
They're still on. I haven't touched them. I haven't rolled them. Obviously, we're looking at the time decay factor on that, but I still think we're going to get the passage of that, and we're going to be just fine and much higher for Bitcoin.
Well, and additionally, Tom Lee was originally calling for a doubling of Bitcoin. Now he's kind of said, well, maybe it goes somewhere between 150 and 200. That's fine because we're at like 104,000 right now, down from a peak of 120. I mean, that would be like a really big move from where we got into it. And like I said, it was a set it and forget it trade because we had a lot of time. And yes, sometimes options, you do the set it and forget it trade when you're playing a much bigger move. And the other thing is that's going to help it that Tom really talks about is Fed easing. Fed's going to ease. We get some more weaker economic data. They're going to have to ease. They don't have a choice in what they're going to be doing. And so that'll help us in the month of December. And yeah, we got a little bit of static kind of going on here right now. But we kind of needed a little bit of that, and we're doing it without really inflicting a lot of pain on the market. So it's okay.
I totally agree. All right, we gotta keep rolling here. Let's start to cover our big names that we're tracking today. As I teased in the cold open, first name on the docket, Cisco. We had UOA in this name, by the way. Producer Jarrett's going to show you, I believe, a slide with that UOA. Cisco Inc. reporting their results, achieving an adjusted EPS of $1, which exceeded the street's consensus estimate of 98 cents. Revenue, well, $14.9 billion, also handily surpassing the street's expectation of $14.78. And of course, the best part, because we know that these things trade not on the report of earnings of what's in the past in the rearview mirror, but the guidance. Cisco actually offering some pretty bullish and pretty positive guidance for the future. Of course, based on what, folks? AI infrastructure demand orders just in the last 3 months leading up to the 25th of October, $1.3 billion, an increase month over month in that sector of 10%. Congratulations to all the rebels that got in on that one. Geoff, this second one, Firefly Aerospace, man, this thing is really rocking and rolling.
Hey, Mark, before we get into the Firefly one, I wanted to show something really cool about Cisco kind of going forward, which is part of our work. So, Jared, if you can hook me up with the screen, that would be great. This is really kind of cool stuff we do. It's the seasonality of Cisco. And when this magenta line is going up, that means that the direction is positive, and we don't hit another weak spot where we have this orange shading underneath until next April. So we're in a positive seasonal patch now on Cisco from now until next April, which is really great. And the stock obviously is breaking out from where it's at. And the other thing is we just look at the volume. And here is our unbalanced volume. Look at this. It's just been kind of straight up, just nice. And as it's been moving up, everything's been working. So we have good volume in it, and we've got seasonality. So that's all I wanted to show on that one.
Maybe that should have been my cold open. Cisco seasonality instead of cooking with Cisco. All right. Firefly Aerospace, FLY is the symbol there, up just before we went live, over 22%. This is a aerospace and defense technology company. This stock benefiting from an upgrade over at Deutsche Bank to a buy rating. They're expecting 2025 full year revenue to come in between 150 and 160 million. That handily beat the street's expectation of just 135. By the way, these guys, part of, as I understand it, Geoff, the development of the Golden Dome here in the United States, maybe also in Canada if we're nice or they're nice to us. Let's now cover Dillard's. Dillard's also doing pretty well today, reporting strong third quarter results, revenue reaching 1.47 billion, surpassing once again handily the street's consensus estimate of 1.43. This one's interesting, for me, Geoff, because there's all of this concern about the impact of tariffs, the impact of inflation, pullback in consumer spending. Well, Dillard's, to the naysayers, hold my beer. And then, Geoff, let's just cover the last one.
Well, and Mark, just
Yep.
a quick comment for you on that too. It's funny. I was on another conference call this morning, and we were talking about how good Macy's was, and Macy's chart looks very similar to. And I made the point. I said, "Hey, Fred, you should look at the chart at Dillard's. It's almost as good." And the only other department store, it's interesting. We only have like 4 stocks in the department store category. The third one is Kohl's,
Yep.
which doesn't look as good, but it is in a general up and to the right over the last, say, 6 months or so. But Dillard's and Macy's have proven that, like, maybe we can actually still have department stores,
Yeah, it's interesting. And, if you've ever walked into a Kohl's, you can kind of understand why that they are the runt of the litter. It's a store that really lacks an identity. The format, the layout is kind of crappy. The brands are ones that you never have really heard of, but they sort of are reminiscent of brands that Not one of my favorites. Okay, tears in the House of Mouse, right? Listen, this thing has been struggling to remain a relevant competitor, particularly in the world of streaming services. Well, their Q4 and guidance for next year, I should say, really failing to impress. Revenue dropping on a year-over-year basis. They did see some gains in their sports division. Not surprising. That's one of the only things that's still cranking that you can always rely on in the streaming world is people having that tremendous, tremendous appetite for sports broadcast and sports-related revenue. Disney also announcing a $7 billion share repurchase that's on the calendar for 2026 and a cash dividend of $1.50 a year. 2 interesting moves for a company that is not exactly hitting it out of the park these days. Geoff, before we jump into the Shorty report, anything you want to share on your outlook for the House of Mouse?
It's got shorts in it, so that's a positive because that should provide some support. And the bigger deal is they basically have taken their traditional content, the traditional media off of YouTube's version of cable and internet. And so that thing has to get resolved, and they need to get it done sooner than later because it's creating ill will with all these people that want to watch, especially ESPN. And they missed college football this last weekend. And as we know, like, Game Day has become probably the most popular TV show on TV.
Yep.
If I didn't have my Game Day, I'd be going crazy. And so YouTube has really gained a presence, and Disney just needs to cut a deal with Google on it and just get it done and move on. And then they'll be better for doing that. If you got the content, you got something valuable, just take care of it and get the deal done.
Totally and completely agree. All right, Geoff, you got the short report, very special. Share it with the Rebels.
Well, end of last week, we got an update on the latest short interest numbers. And again, they're really interesting. New York fell by 14 basis points, but NASDAQ went up 2.10%. So the multi-decade peak for New York was 18.36 billion shares short. And now we're at 17.835. So we're pretty close to that high. And we started the year out at 15.49 billion. So we've had a considerable rise on New York and also on NASDAQ. NASDAQ started the year at 14.46. And we hit the absolute high at 17.298 billion. And now we've climbed back up to 17.265 billion. So the point is, short interest is up nicely for the year. New York's up 15.11%. NASDAQ's up 19.33%. And there's a good reason why it's been able to kind of go up is even though it's been a strong year for some of these indexes, only 47% of our full universe of stocks that we follow are up for the year. So in this latest release of short interest, one thing that we love to do is to track unusual activity when the short interest comes out. And one thing that was interesting is in the latest jumps in short interest, one of the stocks at the very top of the list, the second biggest increase, was Ondas Holdings, symbol ONDS. And what's interesting about this thing is the shorts just went into this huge after it already had a drop from 10 down to 5. So very interesting that shorts are willing to go into some of this speculative. This is a crypto miner. They're going after the stuff that has run, and that can be pretty painful if it gets another leg to the upside. So we saw another interesting name in Aurora Innovation, which is in the autonomous driving business. The short position went up by almost 14 million shares. A really nice increase in that one. And it shows the willingness of shorts just to go after stuff they feel like, oh, this isn't going to work. It's not going to play out, but it may end up playing out. The third name that we caught, which is really interesting, was Wendy's. Wendy's just announced the other day that they're closing down a bunch more restaurants. The short intensity is now 100%, 5.26 days to cover. And it was one of the top like 12 stocks in terms of the short position. The short position went up by 6.6 million shares and now has short intensity of 100% in 5.26 days. And yet the stock hasn't been able to get going this year. It's in kind of a flat formation, but this could, a squeeze could take this thing back above 10 and then 12 and a half and then maybe even 15 over a period of time if the shorts get it wrong on this thing. Now, one that they definitely got it wrong on was SEE, which they added to again, which is sealed air. And we in Rebel Squeeze Play Pro back in September added it in as a buy idea because the shorts had been adding to it, but also because we caught a single day where the call activity was almost 20,000 contracts. And we thought, oh, maybe someone kind of knows something. Well, today we got the answer to that. And yes, someone did know something. It's being taken private. And guess what? It's gone from 36 to 43 and change today. Quite a move. It's one of the biggest movers on a day where stocks are really struggling, but it proves the value add of looking at options activity and short interest together. As Marc would like to say, it's chocolate and peanut butter all in one taste, which is usually a pretty good thing. So with that, that's our latest update on short interest.
Folks, thanks for joining us for another hard-hitting episode of the Rebel's Edge. Tomorrow, of course, Friday. Thank God it is Friday, so no Rebel's Edge, but we will be back next week, Monday through Thursday. We're going to have a couple of shows next week that are hosted by that guy there, Geoff Garbacz and Justin Nugent. Why? Pete, John, and myself are going to be wowing our fellow cruise guests with our knowledge of markets on the Grant Cardone Foundation's celebrity cruise in support of his charity on the absolutely beautiful Ritz-Carlton yacht Ilma. Looking forward to that. We'll see many of you tomorrow on Cocktail Hour. Always looking forward to that one. And if we don't, in the meantime, have a wonderful weekend. Trade smarter.